how to invest $250,000. Congrats, you've accumulated the money. Now what? How to invest that, what to buy, and what accounts to open right here, right now. Stay tuned. I'm Rob Tatro from robtatro.com, portfolio manager at Canaccord Genuity Wealth Management and the Tatro Wealth Advisory Group. The Tatro Wealth Advisory Group really has a neat name because it's my last name and it is also shared by my sister, Tanya Tatro. And I'm bringing her in right now to the show. Tanya, thank you for joining me.
Thanks for having me, Rob.
Take a sec to like, subscribe, and follow. Press the red button if you're watching on YouTube. Subscribe to our channel. We put out a lot of great content. Help me get to 10,000 subscribers. Come on, help me. I want to get there. The topic today, you've accumulated $250,000. How to invest that $250,000. I have with me my business partner and my sister, Tanya Tatro. Tanya, this is a question that comes up often. You know, the 250 grand. Do I have enough to work with a professional? What do I buy? Do I buy ETFs? Do I buy mutual funds? Can I get a custom solution in Canada? Are people offering that service, or am I strictly stuck with mutual funds? Maybe we should start with the first thought on your mind when you meet someone that's got $250,000.
Well, my first thought is, yes, we'd love to work with you because $250,000 is right at that point where you can really start getting custom solutions for your portfolio, right? So this is typically right around the amount of liquid assets that our prospective clients might have when they come to us and they're wanting to get out of a mutual fund strategy, right? So it's the perfect time to consider something a little bit more custom, I think.
Big fee savings, right? You go from $250,000 in mutual funds where you're paying 2.25%, 2.5%, 3% in MERs. That's a management expense ratio. That's a big number on 250 grand. And you go to a custom solution. There's big savings, much more transparency. But I think the real thing is you can get a much better strategy, because if you have 250 grand, my opinion is, and I think you would agree, you are beyond mutual funds. You're beyond the point of strictly having mutual funds, that cookie cutter portfolio, that idea that you can't own individual stocks. 250,000, you're well beyond that. So maybe talk a bit about kind of what you would see in a portfolio that had $250,000 and how you would invest it. What did you do with your first $250,000?
Well, when we're looking at this amount, of course, the first thing we're going to look at is, what time horizon and what eventually we want to use this for. But once we've established that, it's really going to be a matter of risk tolerance, and it's going to depend on each individual person. But for me, what I'd like to see in a $250,000 portfolio is, a certain allocation to equities for growth, particularly if it's someone who is still in their working ages and has that risk tolerance. And this is where it's going to be a big change for someone who's coming from a mutual fund strategy, because now we're going to want to actually see individual positions, individual stocks in the portfolio. It's getting fun. Now this is the fun stuff, right?
Yes.
So
yeah, that's what we want to see.
Yeah, this is where Rob and I get super excited now. And now we're thinking, okay, what kind of stocks do we want to have in that portfolio? So I personally would like to see anywhere from, let's say, a dozen names to 20, 25 names. And in that, we're going to want to have some geographical diversification, right? So we'd like to see, let's say, 5 to 10 Canadian names, maybe some financials that pay some nice dividends. We're also going to want to have some exposure to US large cap, probably see some tech names in there as well. We don't want to forget about that. There's great potential for growth there. And then we might also want to see some global exposure as well. And that could be maybe through some ETFs in addition to individual positions. And we're just going to want to make sure that we have access to kind of various sectors there. So we might even add something like crypto or perhaps some
green energy.
Yes, I like that. Yeah.
Or maybe some EV, or maybe some e-gaming. I've talked about that in the past in some of my other videos. Stuff that you can't actually go out and buy 15 or 20 stocks for, but you do want exposure to the sector, right?
Exactly.
And they create these ETFs, and those ETFs are electronically traded funds. They're perfect for that exposure to a niche sector. Maybe it's 3-4% of the exposure of your total portfolio, but it's a nice little piece, and you tuck it in and you add it, right?
Yeah, I like it.
I also think we should consider here where the assets are going to go. So you've got 250 grand. If this is, let's say, an inheritance, or you've sold a house, or you've sold a business, or it's the first time you get 250 grand, what are some of the considerations for the account that you will open, and where that money will, in which account the money will be invested?
Yeah, we're putting the cart in front of the horse here. So first, let's talk about kind of where you want to invest that. So this is going to depend on where you're at in your life. Are you still working? Are you retired? What is this money going to be for? What is the time horizon? When are you going to want to use these funds that you're investing? So typically, an easy no-brainer would be, if you have room in your TFSAs, we would generally, for most people, recommend topping those up. That's always useful, that you're going to get that tax-free growth there. Now, a situation where you may also want to consider an RSP contribution, or investing in an RSP, is if your income, or if you're married and your spouse's income is high, then you may want to consider RSP so that you can get that income tax deduction.
Yes, you want to get the money back from the government. The government allows you to take a contribution, you continue to save it, and you do get that money back in terms of a tax refund. Now, if you haven't seen the videos on this, check them out. We do have videos on RSP versus TFSA contributions. We do have videos on, when to commit to either one of those, and when to contribute to your RSP, TFSA. Tanya, what about the actual asset allocation itself? Should you take a whole bunch of risk, and how would you make that recommendation for a client?
Well, this requires quite a bit of a deep dive into each client situation. So I'm not going to, come here on this video and say this should be your asset allocation, because the only person who can really determine that is going to be the person who's investing with the help of a professional, right? So this means asking a lot of questions. And typically, what most investors have trouble with is volatility, right? This idea of seeing the value of their portfolio go up and down. So the allocation that we're going to give to equities or to stocks is going to be very, very much dependent on how much volatility any individual investor can stomach, because it can be very stressful. This is where having a professional, having a portfolio manager can really help the situation, because we're taking emotion out of the equation. We are then coming up with an asset allocation that works for your situation, and then from there it can be implemented with all of these fun things that we're talking about, like the stocks and all of these other investments, right? So you just need to ask yourself that question before you start deciding what you want to invest in. Is how much volatility can I tolerate? How am I going to feel if there's a big stock market crash tomorrow and I see my portfolio take a dip or a dive?
That's the $1 million question, because viewers out there assume they can handle volatility. They go online, they go in these Reddit chat rooms, or they start reading up about stocks, and they start speculating, right? They start buying stocks not that have a future cash flow, because we measure companies based on the net present value of the future cash flow of that company, or the future profits of that company. But if you're going online and you're picking stocks based on chat room chatter, you're speculating. And be careful if you start speculating, because speculating means they might and could go to zero. So we just want to warn you out there, if you got your first 250 grand and you want to put it all in a few speculative positions, we would advise against that. There's nothing wrong with having a portion of your assets in speculative stocks, a small portion, if you can withstand the volatility. But the majority of your assets should be placed in long-term, either growth equities, alternative assets, or even fixed income if you're really, really defensive. Tanya, I want to ask you, what would you say to someone who said, you know what, I'm just going to pick 5 or 6 stocks on my 250 grand, and that's that. I'm going to park it, and I don't need a portfolio manager. I don't need 20, 30, 40 companies. What's the downside of doing something like that?
Well, there's always going to be a concentration risk there, right? If all of your 250,000, if this is your entire liquid assets, if this is your net worth, and you're putting it all into 5 or 6 names, you've got to be ready for what happens if those 5 or 6 names are related to each other, and one goes down and the rest goes down as well, right? So I would like to see in a well diversified portfolio, I'd like to see more than 5 or 6 names.
So, you and I grew up with a mom who was an accountant and a dad who was an investment banker / stockbroker. So, and they both decided to diversify their wealth with real estate holdings and real estate development. And, it's been good for them. And it's something that we learned growing up, and that in the portfolio management that we typically see, most people don't do alternative asset classes. And yet the wealthiest Canadians on the planet, the wealthiest people on earth, institutions, endowment funds, they all have alternative asset classes in their portfolio. So maybe talk a bit about the position and the role that can play for Canadians.
So a couple of advantages to having alternatives in your portfolio is, number one, they're not correlated to the stock market. So this does a few things. It reduces the volatility of the portfolio. And in another way, it also can reduce the risk of the portfolio because you have diversification, not just within asset classes, but across asset classes. But another point that I want to touch on is that it can also help with performance. If you're choosing the correct alternative asset classes, ones that are liquid, it can then be used for strategic transactions. In other words, tactical asset allocation. So markets get a little bit top heavy, we're able to trim some of those profits, buy some of those alternative asset classes. And then that can now act as a little bit of fodder, a little bit of ammo. If ever we see a market correction, we can then sell those alternatives at full price and then reinvest at a good price into the stock market. So
yeah, we did that trade. Those of you that follow our YouTube channel and my career on BNN have seen me talk about this and have seen this trade. We did it right before COVID. We trimmed equities, we added to alts, and then we actually went back and bought some equities at a significant discount. It's a big part of tactical asset allocation. So you talked about tactical asset allocation, you talked about reducing volatility, you talked about uncorrelated assets. I guess there's also kind of the tax efficiency of it, and they actually provide pretty decent returns overall too, right?
Yeah, for many investors, some of these alternative asset classes, are enough to get some income and some growth as well. So if someone has, let's say, a corporate account, a non-registered account, so let's say you do have this, $250,000 that you want to invest, you've topped up your TFSAs, maybe you've used up all your RSP contribution room, now you have a non-registered account. And so these alternative investments can be perfect for those accounts because you can draw that income and it's very, very tax efficient.
Yes, I love it. I think our parents would be proud of that way we described alternative asset classes. Tanya, thank you so much for tuning in. If you're watching at home, take a sec to subscribe, like our videos, follow us if you're watching on Facebook or Twitter or Instagram. And always, if you have any questions on this or anything else that's on your mind, go to www.speaktorob.com. We'd love to book a no obligation consultation for you to chat with me or Tanya about this or anything else that's on your mind. Tanya, thanks so much for coming today. I appreciate it.
You're welcome. Anytime.
Yes, we will do this again. And to the viewers out there, thank you for tuning in. I'm Rob Tatro from robtatro.com, portfolio manager at Canaccord Genuity Wealth Management and the Tatro Wealth Advisory Group. Thanks for tuning in. We'll see you in the next video.